Hello everyone, welcome back to my channel. So today we will be talking about the stock market and its bull run for the past couple of days after this crisis has happened in March and April. But before I get into my stock portfolio and how's it been performing since last time we talked about ETF dividends, I'm going to go ahead and read you what I read a couple of days ago on Yahoo Finance, and it talks about the black family and white families and how there's a disparity between the two groups and other minorities when it comes to investing and building wealth. So let me go ahead and start with that. But before I do, you are watching Cheap Compadre, and I'm one cheap compadre. And for those who are subscribed to my channel, thank you for continue being a subscriber. And for those who just signed up to my channel, welcome. So here we go. So few black families will benefit from the historic stock market rally. So let me just give you some background statistics and information that they sent out last couple of days from Yahoo Finance. So it says a surging stock market despite a global pandemic and nationwide protests is calling attention to the wealth gap faced by black communities in the United States. Optimism over an economic rebound has inspired a week of positive movement in the equities market, as the Dow Jones Industrial Average rose almost 7% since market lows on March 23rd. The S&P 500 has the largest 50-day rally in its history, according to LPL Financial. And then it goes on to say, but every day after market close, protesters in cities across the country have taken to the streets following the death of George Floyd under the custody of Minneapolis police. The protests have sparked conversation not just on police brutality, but on social economic factors that support the systematic racism faced by black communities. The stock market is one example of wealth divide. Data from the Federal Reserve 2016 survey of consumer finances shows that 61% of white families have some stock holdings, compared to only 31% of black families. Not only do fewer black families have stock holdings, but those that do also have far smaller stock holdings. The median white family had over 51,000 in stock holdings, whereas the median black family had only 12,000. 12,000. So basically, what they're saying here is that minorities are not taking more of a risk in order to build wealth besides the 9 to 5. So what I'm going to do here is show you my ETF portfolio and show you the progress that it has been doing in the past couple of days. But before I do that, I just want to say that for those individuals who still have an income coming in and those who are going back to work, you have to be able to find other ways in order to make income, passive income, each month coming in for you. Just in case if you are faced with a crisis like the past couple of weeks where your job is on furlough or you are just plainly fired and now you're on unemployment. Now you have to understand, with unemployment you have up to, I believe, July, and then after that, who's to say if they're going to have another stimulus bill? They may just decide that they're just going to let people figure it out on their own. probably decide that they need to strap up their bootstraps and find a way. But I'm here to tell you, there's another way besides working a 9 to 5. You can invest, you can do real estate, you could do many things, become an entrepreneur. But what I like doing is I like investing in ETFs because it's a more sure way of receiving passive income each month, quarterly, or annually. But I like when I receive it each month. So I'm going to show you my portfolio and show you the progress, and also tell you what I'm going to be doing next with my portfolio as well. Alright, so here we go. Alright, so let's look at the discrepancy between different minorities and different races when it comes to investing. So here we have a median value of stock holdings for families with holdings by race or ethnicity of respondent. So you see the chart there, thousands of $2016. So do you see where the whites are at? You see they're at the top there, right? So about maybe what, almost $60,000 invested in the stock market or more. And then you're followed by others. And then after that you have Black and Hispanic, and also Hispanic. You see how much they put into investing? Less than $20,000, right? So let me show you my portfolio to give you a better understanding of why, as we go back out into the workforce, we need to start thinking beyond just a 9 to 5. We need to start thinking about other ways of bringing in an income, just in case if the job that you work for goes bankrupt, or to start laying people off, that you still have some form of income still coming in that keep you afloat. So here we go. Alright, so here we go. So I'm in my E-Trade account, my broker's account, and let's look at the value of my stock now. Now remember, last time I showed you my ETF stock, it was down about 15 to 20% last time I showed you. Now look at where my portfolio is at now. It's at $47,453.39. Now look at the value of it, the price I paid. So as the stock market was going down, I was doing cost average. So every month I will put a certain amount of money into those ETF stocks that I have. Now remember, I only have 3 stocks. Now I know that a lot of investors like to have about 20, 30, 40, all the way up to 70 different stocks because they believe that's known as being diversified. But in true essence, that's not really being diversified. The true diversity comes from ETF stocks, because remember, each stock you have about 10 to 12 different companies under one stock. That is more diverse than an individual stock. And plus, you can put more money into those small amount of companies where you can get more of an income. Now, remember where I told you don't look at the red? Because if you start looking at the red, you will find yourself thinking about selling your stocks. Where, remember I told you that all my stocks that I had when you had this crisis, this pandemic, I did not sell not even one share. Even though you had many other YouTubers who also invest in dividends selling their stocks. So remember I told you don't look at that, but actuality you need to look here where it says estimated income. Now this is very important that you understand this, because for those who know about compound interest, this is what I'm going to receive on top of what you just seen in my portfolio. You see that? That's in 1 year. Now, what do you think is going to happen? What do you think is going to happen the next year? What's going to happen is that's going to double. And then the year after that, it's going to also double again. That's known as compound interest. This is the reason why I invest in ETFs, because the more you invest into the stock, the more dividends you get, the more you receive, the more passive income you can make. You see that? Now, there's individuals out there who are investing in individual stocks. Those are individuals who are also investing in dividend stocks. You also have individuals who also invest in day trading. Now, me, I prefer to invest in dividend stocks that are ETFs, because it has more companies under one stock, where that's more diversified for me. So if one goes down, others will go up, or vice versa, where I don't lose as much when I invest into these companies. Okay, so I'm going to be investing about $5,000 to $7,000 into this account, and I'll be keeping you posted and see if my estimate income has grown larger. But as you can tell, for those who listened to me last time, I told you do not sell. If you didn't sell, you came out a winner. If you did cost average, if as it was going down, you just bought a certain amount each month until it went back up. Now look at my stock. It's worth even more. You see that? And a few days from now, it's going to be worth even more, because I will be investing more. But I know these are trying times, and I know people are very desperate and they want to make a lot of money. But let me just say this before I end this video. You had people like Warren Buffett, who did not become wealthy into his middle age. Now he's known as Oracle. Now, let's talk about Bezos. Okay, people laughed at him because he decided he wanted to sell books online. When he first started, he made no income, no profit. But years later, he's the world's richest man. So for those who are trying to get quick, fast money quickly, trying to do day trading and many other investments, just be careful, because these are trying times. People are desperate. They want to make a lot of money. They want to get into the market, but you can't become wealthy overnight. I can't tell you how many times I heard people trying to get rich quickly. It doesn't happen overnight. It takes time. You have to learn patience. So, until next time, make sure to become a subscriber if you're not already. For those who already are, thank you again. And please, what do you think? Do you think ETF dividends are a good investment? Or do you think day trading individual stocks or other investments are a much better deal? Put a comment at the bottom. If you like this, make sure to smash the like button. Also hit that bell for my latest content. And before I go, make sure to become a subscriber. Until next time.